The total addressable market of financial assets in the world, we already mentioned, was 900 trillion US, okay? I like to put a probability that Bitcoin will attain a certain percent of that total global financial assets, and I construct a probability distribution in my head of a continuous distribution, but we don't have enough time to do that. Let's construct a binary distribution, meaning there's only two outcomes. The first outcome I'm going to use is Bitcoin gets a 5% market share of 900 trillion, and that's 900 trillion in today's dollars. What's 5% of 900 trillion? Jake, I know you know it's $45 trillion. What is $45 trillion divided by 21 million Bitcoin? The answer is it's more than 2.1 million US dollars per Bitcoin.
Bitcoin models.
If you ask me what my ideal outcome for Bitcoin was, this is almost sick, but I could live with the fact that Bitcoin didn't go up from here for the next 20 years. What it means then is Bitcoin gets to be bought by more of the people in the world that really need it at the cheap price that it is at. But playing probabilities until information changes, I think you got to get in and dollar cost average in. Don't be fancy. Don't assume one of the potential outcomes is Bitcoin never achieves its adoption nor price targets. I think that's wrong. I think it's highly unlikely that Bitcoin price is not substantially higher within the next decade than it is now. I come from a credit background, and the first thing I try to do is value Bitcoin using open market interest instruments that people can't argue with because it's set by the market, okay? I'm not making the market on credit default swaps of sovereign nations. That's set by an efficient market of participants who are determining what the likelihood of default is of sovereign debt, and it changes on a daily basis, and it's reflected in what's called a CDS spread, or a credit default swap spread, on that particular borrower. I spent my life in credit. I think credit is a very smart market, generally dominated by people who like mathematics and who have mathematical models. So the first thing I do is I calculate a value of Bitcoin relative to other instruments in the world, and I determine whether Bitcoin is rich or cheap on a value basis. And I mentioned my CDS methodology, and Swan Bitcoin has a guy by the name of Alpha Zeta, that's his Twitter handle. Alpha Zeta produced this thing called the NakamotoPortfolio.com. It's a brilliant open source software portfolio that one of the tools in there calculates the value of Bitcoin using the Foss model of CDS spreads. I ran it this weekend, and using open market rates together with a couple of adjustments that I use, because they're personal adjustments, I get a value of Bitcoin today. A value, not a target. I need to say this. It's a value that can change because the open market spreads change. The value is over 250,000 US per Bitcoin based on that methodology. So that's the value. Now you ask me for a target. Well, don't forget that value changes as the probability of default of sovereign debt changes, because I view Bitcoin as being the anti-fiat. But let's go back to a simpler target price methodology. The total addressable market of financial assets in the world, we already mentioned, was 900 trillion US, okay? I like to put a probability that Bitcoin will attain a certain percent of that total global financial assets, and I construct a probability distribution in my head of a continuous distribution, but we don't have enough time to do that. Let's construct a binary distribution, meaning there's only two outcomes. The first outcome I'm going to use is Bitcoin gets a 5% market share of 900 trillion, and that's 900 trillion in today's dollars. What's 5% of 900 trillion? Jake, I know you know it's $45 trillion. What is $45 trillion divided by 21 million Bitcoin? The answer is it's more than 2.1 million US dollars per Bitcoin. So I have a valuation methodology that says it's worth over 250,000, but that's a dynamic measurement. And I have a target in this binary outcome of over 2 million US dollars per Bitcoin, which assumes that 5% of all of global financial assets get moved into Bitcoin. Everything else being equal, that's 45 trillion, or otherwise about twice the size of the US GDP. Point is, you have this target. To make the math easy, let's make it a $2 million price target. And today, and it's in today's dollars, I need to be very clear about that. That's 2 million US per Bitcoin in today's dollar. So we're not talking about appreciation or due to a deflating or debasing US dollar. So you got 2 million, and the other side of the equation is a zero, okay? And let's put a probability that that happens, and we'll play a game. I'm not 100% certain it gets there, But if I was 50% certain it gets to my price target and 50% certain it goes to a 0, which is also not really an outcome, but we'll still use it in our probability analysis, 50%, when you calculate an expected value, 50% times your value of 2 million equals 1 million, plus 50% times 0 is 0. You add the two together, you get an expected value. That's what expected value analysis is. Meaning, if Bitcoin is trading at under 1 million US dollar per Bitcoin, based on this binary distribution with a 50-50 outcome, you're supposed to buy it and buy more if the price is under a million. But here's where the math gets interesting. What if you turn it on its ear and say, okay, what is the probability the market is giving me that my price of 2 million is? And it's trading at 30,000 US. Make the math easy. 30,000. What's 30,000 divided by 2 million? It's 1.5%. It's another way of saying the market is only giving me a 1.5% chance I'm right, and it's telling me there's a 98.5% chance I'm wrong. Right? You get that? Right? 1.5% times 2 million is 30,000. 98.5 times 0 is 0. You add the two together, there's your 30,000 per trading price in today's dollars. This is how I like to summarize it. I'm not 100% certain Bitcoin hits my price target, but I'm way more confident than 1.5%. You cool with that? Therefore, Bitcoin is cheap on a probability adjusted basis, as this knucklehead from Canada, Foss, thinks about probability distributions and outcomes. And therefore, I'm comfortable owning Bitcoin at 30,000 bucks. And here's where things get fun. Even at 100,000 bucks per US per Bitcoin, it's stupid cheap, people. It's stupid cheap at 3 times the price.